John, we're going to talk today about just how performance in terms of equities, there are different sectors or different sizes of companies. And for a certain period of time, say large cap US stocks may outperform and be driving markets higher. But inevitably, that will change. And something, who knows what that may be? Maybe something economic, it may be something technologically, but something will change. And then we'll maybe see international stocks outperform or small caps. And so, John, why don't you just kind of walk us through big picture over a number of decades of investing for your clients and just in your experience, what you've seen when it comes to how do you keep this front of mind and recognize the importance of making adjustments in your portfolio?
I feel it's critical to make sure you recognize that the market does move in cycles, and typically, whenever a certain asset class outperform for a season, then it's going to underperform for a little while. Maybe growth does better for a season, then all of a sudden value does. Well, sometimes those seasons are longer, and sometimes they're shorter. But what you need to recognize whenever you have outsized gains for a period of time in one particular company or one particular sector or one particular region, let's say international versus U.S. You need to recognize that things do come full circle and back to the mean or the long-term averages. And it's so interesting, Drew, whenever you look at things from a historical perspective, we've seen the U.S. stock market greatly outperform international here in the last decade. But then when you look back 20 years ago, international was outperforming the U.S. 4 out of every 6 years. That went on for about 2 decades. We also have periods of time where small caps have outperformed, that's the 1960s through the 1980s, outperformed large company stocks. But over the last decade, large company stocks, particularly large company growth stocks, have greatly outperformed small company stocks. Well, right now, we're starting to see a confluence of a number of factors, and we're starting to see outperformance on the ones that have actually underperformed. And I think some great examples really is the international holdings actually outperforming the United States by a significant margin so far this year. And that can be for a number of reasons. But really, sometimes folks like to look at reasons and say that's the reason for it. And maybe it's a lack of confidence in leadership or whatever, or great confidence in leadership. The reality has more to do with what happens over periods of time. And so, whenever you have outperformance of a particular, let's say, country for a longer period of time, there will be seasons of underperformance. And so, right now, we're seeing which we invest in IXUS, which is international minus US, has outperformed the US market so far this year. And right now, Drew, I'm thinking September is really a timely time to be talking about this. Historically, September over the last 100 years is the only month out of the 12 months that has a negative rate of return.
Yeah.
Starting off the first part of this month, we just came away from an appellate court decision. It was a split decision, it's down partisan lines, which said that the tariffs that were put in place by current administration, President Trump, were unconstitutional. Therefore, all the dollars received from those tariffs must be sent back to those countries. It just creates uncertainty. Now, that's going to go before the Supreme Court. That might change. Now, we also know the Federal Reserve already has priced in, the markets have priced in a 25 basis point cut in interest rates. If that does not happen, on top of tariff uncertainty, it could mean that we'll see some negative returns here in the month of September. So, all in all, the time to talk about sector rotation, country rotation, small cap, mid cap, large cap rotation, this is a very timely topic for us to be walking through right now.
Yeah, it definitely is, John. And, for those of you who are our clients, which I believe all of you are watching this video, we've been increasing your international holdings inside of your equity portfolios all throughout this year. This is something that we were tracking and being on top of, and made some good decisions around that. It's added some nice returns to your portfolio. And we'll likely continue to do that as we continue to see some development on some of those topics that John was discussing. But John, another thing that I wanted to just dig into a little bit more is small cap investing. And over the last decade, we've been heavily overweight to large cap international or large cap US stocks. That'd be like an Amazon or an Nvidia, Google, Microsoft. Those stocks have done fantastically well. But John, like you talk about, revenue growth is the most important thing as it relates to a stock's performance or a sector or market's performance. We need to see revenue growing rapidly. And we're going to put a chart up on the screen here that I found just so fascinating. It's actually showing the performance of small caps here in the US relative to large caps. And over a very long time period, small cap stocks have tended to outperform relative to large cap. And that makes a lot of sense, right? These are smaller companies and the revenue is growing much faster. If we know revenue growth is what drives stock market performance, well, it makes sense that a smaller company with a larger percentage of revenue growth would outperform. But John, what we've seen here over the last 10 years is small caps have significantly underperformed relative to large caps here in the US. And this is exactly what you were speaking about as it related to international markets, how we saw a large outperformance for a long period of time. And here in the last few weeks, we started to see small caps begin to rally. And inside of all of our clients' portfolios, we've been heavily underweight to small caps. But John, I think that's probably going to be changing here in the near future. And so, what are you looking for as it relates to sector rotation within the different size sectors of the US stock market?
So there's a lot of that goes into play here. And so I think that we had just come through a period over the last 20 years, 30 years of globalization. Well, right now we're going through a season of what's called deglobalization, where a lot of the countries of the world, the United States is definitely one of these and a leader in this thought about how we need to take care of your individual country first before we look at expanding outside of your particular country. And so that's called deglobalization. And so we know that larger companies have a stronger moat or stronger advantage whenever it comes to making investments outside of their domestic country. And so it'd be more difficult for a small company to be able to achieve any traction or compete internationally. And so, because of the movement, big picture, and deglobalization, we're seeing increased opportunities for small companies to start outperforming again. Whereas over the last 3 decades, we saw globalization actually dominate, positioned large companies to actually outperform. We're also seeing increasing confidence in small businesses from a financial standpoint. And so, small businesses have actually done a phenomenal job in making long term decisions and being more focused upon return inside of the companies versus trying to pander or play to outside shareholders. So, due to that, they have stronger cash positions and lower debt. They're more nimble, and they have the ability to actually adjust their business plans a little bit quicker than large companies. And so, we're looking really for strong balance sheets here of small companies. We also know that there has been some strong trends as far as in developing skill sets that we really particularly need as far as in small companies, as far as them to be able to magnify their benefits. And so this push, as far as in education and after high school training in certain skill set areas, is actually positioning a lot of the small job shops to outperform going forward. So all in all, the environment is actually very healthy to see small size companies actually performing at a higher level. On top of that, Drew, we've also know with the recent change in tax law in the United States of America,
Right?
there is some strong incentivization from a tax standpoint to actually help small businesses increase the return by getting credits, tax credits, and tax deductions by investing into small companies that are domiciled here in the United States of America. So all that plays together for a strong launching pad heading out into the next 2 to 3 years that we think the small company stocks could actually outperform large company stocks here in the foreseeable future.
Yep. Yep. John, great summary there. And as you all know, we spend a lot of time working on the technical side of things, letting us know when's a good time to buy and when is a good time to sell. So what John was just walking through there, that's really the fundamental side, looking at the big picture, the economics, the balance sheets, and really understanding, hey, what are the areas that looks like they're coiled up and ready to take off? We're developing our target list of changes we may make inside of your equity portfolio. And so when it comes to small cap investing or international or even large cap, what we're really tracking closely once we have that list developed is our technical side, letting us know when is a good time to buy. And on small caps, we are approaching some target zones where we likely may increase the overall position in your portfolio to small caps. We think there's a lot of value there and a lot of potential for revenue growth. And so I could foresee that being a change we make. Now, John, we've gotten into the nitty gritty here, talking about a lot of stuff, but why don't we just zoom out and just talk bigger picture? How does this conversation around rotating between sectors or being mindful of revenue growth, how does it really impact people's broader financial positions and helping them ensure that they achieve their big picture financial goals?
Yes, keep in mind, folks, at the end of the day, stocks actually move up or down based upon their earnings and then the forecast of what the earnings are going to be in the foreseeable future. So 3 months, 6 months, 12 months, 18 months out. And so we're always looking at earnings. And so right now, a lot of you heard me speak over the last 6 months to a year about the Cape Shiller Index. And so the Cape Shiller Index actually is structured the way we view it to measure the S&P 500. And so that really is 500 very large companies. And so we hit the second highest Cape Shiller Index reading all time last fall. That's when we started increasing stock or cash positions. And that told us that the large company stocks had really outperformed relative to their earnings. Well, then we saw this when we went to cash positions and increased cash, we saw the stock market drop back down from February 18th all the way through the middle part of April. Right now, at the end of August, the Cape Shiller Index just passed what it was last fall. So, Drew, what that's telling us is that we're starting to see prices of companies expand relative to their earnings. In other words, the stock price is getting way far ahead of their earnings. And so that's setting up for a pullback, which means a rotation opportunity. And so right now we see opportunities to rotate into a number of different areas. As far as on stock market, we really see opportunities to rotate into small and mid-sized companies. We also see opportunities to rotate within sectors into some energy holdings and pharmaceutical holdings and banking. On top of that, we also see opportunities to rotate into international at a higher level. And so equity positions rotating in those areas. But Drew, we also see opportunities to take some profits out of equities and rotate into more guaranteed accounts. Now, right now, we have a fixed account that is paying right about an 8% interest rate for the next 12 months, which is a phenomenal opportunity that would apply to some people. We also have opportunities inside some of our buffer products that are both have guarantees on them, and those that have maybe not guarantees, but lower risk on the downside, but also rotating into non-publicly traded companies, some tremendous opportunities on that. And we are going to be coming out with a Creekmur specific alternative investment sleeve that's be coming out later on this fall that we're partnering with our wonderful partners at First Trust in developing. This will be available both inside managed accounts and also outside of managed accounts. So if you have a 401k, we can apply it in there. And so big question was what the application is, Drew, whether it's going to a guaranteed account paying fixed interest at 8%, whether it's going to alternative investments or whether it's rotating within different sectors or sizes or international versus US. Right now, we think rotation is a really important thing to be considering.
Yeah, absolutely, John. And folks, as you know, we have a rate cut likely coming up here in September. And typically around rate cuts, that's when we see a lot of changes in volatility. And on top of it, like John said, we have what's likely a slightly overvalued stock market. So I would encourage you all, reach out to your advisor, have a conversation with them just about, hey, here's where we're at today. What tweaks do we need to make inside of my portfolio to make sure that I'm ready for the rest of this year and leading into 2026? I think now, and John would agree on this, is a really prudent time to do that, and make sure you take advantage of where we're at today and just some of the information that we walked you all through. So thanks for the time, y'all. Look forward to talking with each and every one of you soon, or hopefully seeing you at one of our events upcoming here in the fall. And otherwise, we'll stay on board here and keep things rolling along. Thanks for the time.